Hello and welcome to Unearth Financial. In this video, I'm going to show you how to place a trade according to our trade recommendations. There are two ways to place a trade via your broker platform, and that's either an on-stop order or an at-market order. You'll receive our trade recommendations one of these ways. I'll show you both of these now. When you receive our trade recommendations, it'll come through as either an on-stop order or as an at-market order. Now I just want to make sure that you know that these trades here are not trade recommendations, they are examples only, so please do not place these trades. This video is looking at the actual at-market orders and how to place those on your broker platform. So we'll just quickly go through each of these fields within the recommendation just so that you know. I have mentioned them within the other videos, but we'll look at them again quickly now. You'll receive a valid entry date, and this will either be 1 or 2 days, and they expand for the 24 hours globally. So that means if you happen to be in Australia, depending on your broker platform, you'll need to check out when their new daily bar ticks over. But for anyone in New South Wales, Australia, that means either 8 or 9 o'clock, depending on daylight saving hours, the following morning. So that gives you a good 24-hour period in which to place this trade. Now obviously you wouldn't want to go too far away from the actual market when the recommendation was placed, but we'll go into that shortly. Now the market was here, the USD JPY. We were wanting to trade the market long, which means the market needs to rise for this trade to actually profit. Should this box be actually coloured in orange and it says short there, you'd want to short the market or sell into the market first. But we'll look at that in another video. In this particular trade recommendation, we want to buy into the market or trade the market long. Now, the recommendation here is to get into the market at whatever the market is trading at when you get your broker platform. Now, I will give you an approximate price of where the market was at when the trade recommendation was made. And the reason for that is because the market might start moving fast, and by the time you get your trade recommendation or by the time you happen to open your email, the market might be at 93, say 95. And that's an extra 40 pips above what the actual recommendation, 50 pips above what the actual trade recommendation was made at. So that would expand the risk out of the trade to 150 pips. And you would need to make sure you took that into consideration when you were actually working out your money management. Now we need to make sure that the stop loss always remains at what I'm giving you here in the recommendation. Now say for example, when you got to your broker platform, the price was actually trading at 93, say 30. That means that the actual price is below what I've quoted here, and that is okay, because what you're actually doing, if the market has dropped, is dropping slightly after the recommendation is sent, you can actually get in at a better price, at a price that's closer to your stop loss. So you may only have a risk of 50 pips or 80 pips or something like that here per lot. And that means your position sizing could actually increase. Now, we also have our profit target here, and that means that price there is simply the amount of risk on top of your entry price. So you can see that 94.45 is actually 100 pips above the entry here of 93.45. So if the market was to pull back and you got in below this entry price here, and you got in at say 93.35, that means your risk per lot was only 90 pips, and that means you could have your profit target actually closer at 94.25, and that's because your risk per contract is now only 90 pips. So you would be putting your profit target at 90 pips above your entry. Let's have a look at that now on the broker platform. The broker platform we're looking at here is the Kinetic CFD trading platform. And if you'd like to open an account with Kinetic CFDs, please go to our website and click on their logo, which is located on our front page, and you'll be able to get a priority contact form there for one of their head brokers to contact you. Make sure that you let them know that you are an unearthed client, as they actually do receive our recommendation reports and they'll be able to follow along the recommendations that you are trying to place. So we're wanting to take an at-market order with the USD JPY. So once we find the pair here, make sure you understand whether it's a mini lot contract or a standard contract and what you're actually trading. Now, to place an at-market order, you simply click on the green button which is located next to the name, a new ticket will appear. Now, as we want to sell half of our lots or contracts at our profit target, this means that we want to place 2 separate trades for this one recommendation. Now let's just assume that our money management allowed us to get 4 contracts. This means that we're going to have half of our contracts getting closed out at our profit target, and the other half sits there still playing the game in the market until you receive a recommendation from us to close out that balance, or the market will close itself naturally at its trailing stop loss, and you'll receive the trailing stop loss levels. They'll move every now and then, either during the week or even on the weekly report at the end of the week. You'll see those change, so make sure that you update your positions regularly. But if we have the 4 contracts, we then click on the green button next to the actual market name, and we're going to do 2 separate orders. So in this order, we're going to do 2 contracts and then a separate order for another 2 contracts. In this first one, we're going to put our stop loss. Our order was around about 93.45, so this is actually approximately 17 pips different. So rather than being 100 pips, it's actually going to be around about 83 or something like that. Let's just have a look. Yes, 92.45. So our limit order is going to be 83 also, and then we just click the buy button because we want to go long into this market. Now I'm not going to place this trade because I don't want to place this trade at this time. Once we've clicked on the submit button, we will then want to place an identical trade, apart from that we're not going to place this second trade with the second lot of 2 contracts with a limit order. This is just going to have a stop loss of 83 and there's no limit order. So this is the portion that's going to stay in the game and we can continue to play. So then click the buy button and we are set then. These 2 open positions we would see here in the open positions in the live market. Okay, don't forget to go and have a look at the other video, which is on placing trades with either a buy stop or a sell stop order, and our other video tutorials on managing risk, etc. So happy trading and safe trading until later. Thank you.